We are. If you look at the what's called the exponential trend, so it's an ascending curve, increasing at an increasing rate. That characterized the 1920s bull market. It characterized the 1990s. This one's been a lot more linear, and it doesn't have that upward sloping curve since the 2009 low. And so I find it hard to believe that we've seen the top because we haven't really entered that kind of parabolic move.
How would you know when we're close?
Well, you'll see the parabolic move. That'll be the first thing. Euphoria, a lot less doubt in the market. You know, I had not been a bull for a long time. We were in defensives and bond proxies until last October. But when the Fed made their move and the president made his move on the balance sheet and the trade, respectively, you know, we went with a more cyclical, pro-cyclical profile. We thought that some of the beat-up cyclicals, everything from technology to energy and industrials, would get a lift, and financials as well. So far, we've only had some luck on the technology and the financial call, but we do think as the cycle ages, we'll get more.
JJ, to that point, the fact that you had Alphabet enter the $1 trillion club yesterday, you now have Apple, Microsoft, Alphabet, Amazon, Facebook accounting for something like 19% of the S&P 500 index in terms of weighting. How contingent are these continued moves higher on this particular group continuing to drive it?
Yeah, it's amazing, Morgan. The FANG stocks are back in play. But I do think as we head into earnings season further, right now, obviously, all the momentum is there. I think what you're going to see is the chip stocks picking up even more. You know, we have Intel and Texas Instruments starting next week, and we'll continue with the chip stocks going forward. They've had a couple of good weeks. And I think it's very interesting that as the fears around tariffs in China have come off, I think that's one of the reasons you've seen Apple really rally so much more, which takes all their component makers with them. But I think the other part of it is we all feared for chips for so long. They've performed fairly well, and I think they have an opportunity to continue to the upside, to continue the momentum in technology. And as Barry just said about the financials, you know, there's not a single sector, in my opinion, that's had a harder time in terms of the macroeconomic environment in terms of headwinds, yet they continue to perform pretty well. Goldman and Wells Fargo might have had some disappointments, but those were very company-specific disappointments. Overall, it was still a very nice season for the financials.
JJ, for the folks playing at home, say you've been along this market the whole way through. What do you do here? I mean, do you have to take some profit so you got some dry powder if things do turn back down? I mean, even if you do continue to believe in this rally, what's the best strategy?
You know, I think, John, that is a great part of it. I think particularly for your retail investors at home who are watching, so many times they think of things as all or none rather than partial. And I thought the most interesting thing from our client base last year is that actually Apple was a sell 9 of 12 months last year. People may say that's terrible, then your clients didn't participate. But actually what it means to me, don't forget, it's still our #1 held stock. So people were doing exactly that. Yes, did they get everything to its fullest value? No, but usually people who want to be the first one to the party or the last one at the party don't do very well. Taking some profits on the way up, so to your point, you have some dry powder for other investments, is usually a very smart way to go, and it's exactly how professionals invest.
Yeah, the tape has the fact that Apple's market cap is about to eclipse that of the entire Australian stock market. Barry, the title of your most recent report is The Power of Unlimited Free Money. Stay long cyclicals. So I guess one hypothetical would be, what do we do if we begin to hear Fed officials, other than Kaplan, let's say, start to lean into that? What if Powell says, don't get used to this, guys, this will not last forever?
Yeah, I would agree. I think we have come pretty far, pretty fast. We've eroded a lot of the recession fear, and that's accounted for the upside year to date. We've settled down the repo market, which the Fed shouldn't be injecting excess reserves at the same rate on a go-forward basis after the spring. So as the Fed throttles back, I think we might see some pullback here, but for the most part, we're more focused on the intra-cyclical rotation within the market. For instance, a weaker dollar call that would benefit energy industrial, and a 10-year yield moderate late-cycle reflation call, and that would help the financials. So we're focused more on sector shifting the deck chairs and less on S&P upside at this point.
All right. Don't use the shifting the deck chairs analogy. That's not usually not helpful. Yeah,
yeah, fair point. JJ,
we're always one iceberg away.
JJ, the fact that we've been having this debate about whether, on a global level, economic growth, their slowdown in growth has bottomed. Where do you fall? What camp are you in? And I ask that in part because we got some pretty solid or at least stable data here in the U.S. this morning, but some commentary from some key industrial companies that have reported earnings in the last 12 hours that suggests that maybe we haven't been seeing a bottoming.
Well, this is going to obviously be a little bit tricky. And to your point, I was a little surprised that we saw some of those comments also, Morgan. But then you saw the numbers out of China. And even though we had, this slower annualized growth, we had the greatest month over month that we've seen in many, many years. So with that, I do think we still have these great opportunities. But I think for people looking, as John said earlier, playing along at home, I think it's unrealistic to think that we're going to continue just kind of going straight up. Just normal market trading back and forth, you would think we would have some sort of sell-off here, particularly as we have middle of the earnings season type of thing, because obviously some companies are going to come out with great statements. I think the expectations, the sort of whisper number, if you will, is a little bit higher. So I would expect we get some sort of a sell-off. I'm not saying we're going to have a 10% or any deck chair type sell-off, but maybe a 3% sell-off or so, just to kind of force a little bit of people out so that we can actually stabilize the market along with stabilizing growth.